there, everybody. Welcome along to this Thursday afternoon market recap. It is the second market recap over the past four sessions. It has been, right, traditionally a little bit light this week. Again, largely just not buying into the pandemonium that is sweeping over these markets, the complete erratic nature of them, and of course the volatility which is still encompassed within them. Above all else, and what is more important at this particular point, is your families, your own, and of course your neighbors, your fellow citizens of the country you reside in. I hope, right, we're nearing the worst of this pandemic, so to speak, and I hope that we are going to, of course, move through this and beyond this sooner rather than later. So again, I just wanted to wish from myself to you, right, good health, good fortune, and above all, just to move through this period whereby, if we want to recap this and intertwine this back into the financial markets, right, it's a period whereby, again, historically, and if you wanted to think about this in terms of fear and panic, I don't think we have seen these levels recorded, especially in terms of just investor sentiment and psychology right now. More recently, all the way back until that period of October in 2008, whereby it seemed as though the world was ending, but, right, the sun came up the next day and life continued. I feel as though, and as I look at these charts, we're somewhere similar, all right, in a general sort of context on the chart, location-wise, after the sell-off, which is now well into 30% down, whereby it's the first time, constructively speaking, we've got a little bit of, I guess, perimeters to work with, something that's a little bit more substantial than, of course, these flimsy sort of straight lines whereby the market is moving in that of a trend. Now, I'm still calling this at this point an intermediate move, right? The NASDAQ itself, it's still trading down here at 7,150. But if you wanted to just look at this, right, it's been more or less 6 sessions now whereby the NASDAQ has traded around this 7,250 handle. Yes, as at Wednesday, we didn't really get all the way up there. But if you just wanted to look at the intra-session volatility of all of these candlesticks, more or less what we have done is that we've traded above and, of course, below, right, a central point here. And the central point on the NASDAQ, this is the daily chart of the NASDAQ, is sitting down here, right, anywhere between 7,250 and 7,150 as well. And what makes this even more interesting is that, again, when you go out to the weekly chart, to me, this is sure looking like that of a hammer bottom right on, or a hammer candlestick bottom, right at that logical area of support, which is off this trend line. Now, obviously, over the past 4 weeks, it's been an absolute bloodbath in the equity markets. Again, largely, we've just been sitting on the sidelines watching this unfold, and I still commit to the point that I think it's a little bit premature to really be doing anything substantial in these financial markets. But if there's any sort of silver lining to what has been a very volatile period, right, a very negative period, not only in the United States, but globally as well, all right, this is it right here. It's the hammer candlestick on support right around this critical juncture, whereby, again, over the past 6 sessions, and I know 6 sessions in substance, it doesn't really mean all that lot, but it is structure being built around a logical area of support. If we go into, of course, the oversold settings of this market, I mean, personally, I can't recap a time whereby we have been this oversold. This far surpasses that of the 2018 December lows. The MACD is all the way off the charts down here. We're getting extreme prints, and it doesn't necessarily mean that this is going to exhaust itself whatsoever. But if you're thinking about this in terms of stretching a rubber band and knowing that eventually you are going to get a snap back in the opposite direction, I mean, I think it's very, very risky at this point to be, 1, selling to close open positions, or 2, enacting new open shorts. I think that's the wrong thing to be doing at this point. Everyone is still net negative. Everyone is still obviously completely consumed by largely irrational behavior and also fear. Right, I haven't seen really anything like it at all. But the markets themselves, over the past 6 sessions, they're largely unchanged. I mean, yes, we've been up and down and back and forth, but really we're just simply starting to build that perimeter in oversold territory. Now, this isn't only applicable to the NASDAQ. When I go out into the S&P 500, it isn't as strong, but you can really take into consideration the past 4 sessions, and this is really the week of trade which has been. Now, on a weekly candlestick, it's going to look different, because here we were closing up at 2,750 on Friday. That was the 13th of March. We've obviously taken a net negative momentum turn Monday through Thursday, but really the week, although it's going to look like a dark candlestick, it is somewhat of a similar candlestick, right, to the NASDAQ. Now, again, we still have to move through Friday's session, and we're really not allocating much or any capital into the markets at this particular point. But I just wanted to make the point that even on the weekly charts, if you wanted to go back and look at the RSI, not only applicable to that of the S&P 500, but also the NASDAQ as well. I mean, we're seeing prints that we haven't seen more or less ever, or only one or two occasions going back to recordable sort of data that we can work with on our charts. So again, these are really sort of abnormal times. You could say that they are largely artificial times. But at the same time, if you wanted to try and be level-headed about this, maybe it's bringing a lot of opportunity too. Now, obviously, there is going to be an economic hit to, I guess, the third quarter, also the second quarter of 2020. It's too early to say whether or not that's going to trickle on into the third quarter of this year. But in terms of the general market sitting on trend lines or being very close to trend lines, if anything, just slightly below them, and just understanding, of course, sort of that residual hangover, which is obviously going to continue to flow into the markets as people just cannot take it and they simply just want to exit, probably at the absolute worst time. I think there's a lot to be optimistic about in these markets. So again, I just wanted to encourage you that as you look at these markets and as you're following along with these markets, I'd still tell you, right, to pull back on transactions. Just in general, just pull back on transactions and just let the dust settle. Right? Just continue to let the dust settle. But every session whereby we continue to build and form and base, potentially around 20,000 here on the Dow Jones Industrial Average, we're just above it now. I mean, we broke down below, we were heading down towards 19,000, but now we're back up above 20,000 again. We closed at 20,087 points. The question becomes, are we going to see a sustainable bounce over the next, say, 2 to 3 months? That's the big question at this point. And obviously, we're not going to get an answer to that on Friday, but the longer this support area holds, this general vicinity across these three US market indices continues to hold more or less around these psychological round numbers, or at least in the Dow Jones Industrial Averages case, 20,000, the more promising it looks moving forward. And I understand right now it seems as though things couldn't get any worse. And it's really at these moments whereby they just don't, all right? These types of Armageddon sort of scenarios, they're generally speaking rather disappointing, right? They're not really fulfilled whatsoever. And the good news for people out there is that a lot of this damage at this particular point may already be priced into the market, right? Forward looking, it may already be priced into the market. So again, who knows how Friday is going to open up? A lot of the technicals right now in terms of candlesticks, they're pretty much void. Very rarely do I say this, but they are somewhat void. And the reason is because this market, again, is just volatile. It is absolutely volatile. But again, the longer we hold around this base and the longer we move into oversold territory and the longer we don't, right, see material prints to the downside at these oversold levels, at some point there's going to be a short squeeze. At some point there is going to come a clearing rally. And really the value is going to be in assessing whether that clearing rally is substantial or whether or not it's going to be a dead cat pounce upon which we'll be looking to move net short at higher prices. But for the time being, I just don't see the reason as to why you'd be willing, right, to risk your capital on very aggressive trades on individual stocks down and around these areas. It's a little bit different if you wanted to nibble on, obviously, core positions on market indices at this point. I understand the reasons for doing so. And obviously, if we see a bounce, it's also going to trickle into these companies as well. But at the same time, I'm just trying to print a picture whereby there is a little bit of a silver lining to what has been, right, a rather sort of bleak picture. And the picture really continues even through to Thursday, but we are starting to see a little bit of green roots come through and show their value as well. So I'm not going to go into the detail. Also, I just wanted to point out the LEIs have come out. Interesting report, albeit a sort of a paragraph or two on the state of the US economy. That's quite interesting. And also I'll be talking to you about the junk bond spreads, right, or the yields in them. And historically speaking, what that has meant for the markets tomorrow. It's too much to speak about here in the public forum, but I just wanted to preface that for tomorrow as well. So there's going to be a few pieces of outside, more so fundamental information that we're going to recap. And then, of course, we're going to tie in the technical picture at this point. No, I do not want to update my MacBook at this time. So on that note, everyone, please stay rational, stay as objective as you can. But above all else, just look after yourself, your loved ones, and your neighbors. And we'll move through this, and the markets will move through this, and we'll come out the other side better. All right, on that note, I'm going to say farewell to you. Enjoy your Thursday evening. I will see you in a couple of days' time on Saturday in that pro analysis class. Farewell.